Trump and Besant have said they really want the private sector to take over. So what they're telling you is they want the ISM to go up. They want the private sector to start expanding, regular businesses. And regular businesses expanding also drive Bitcoin. So Bitcoin goes up as the ISM goes up. So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. And that will give us the magnitude of the rise in Bitcoin. If it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher. And if you've got any spare income and you can invest, you can buy some of these dips, but be careful later in the cycle. You don't want to overextend when you should be thinking about how do I take money off. But we're far too early for that yet.
A major driver of Bitcoin's next phase is the broader business cycle. Pal explains how economic activity, measured through the ISM, Institute for Supply Management Index, correlates with Bitcoin's movements. The ISM above 50 signals economic expansion, which encourages investors to deploy capital into risk assets, including Bitcoin. Currently, economic growth has been largely fueled by government spending, but policymakers, including figures like Donald Trump, are advocating for more private sector growth. This transition means increased business investment, ultimately boosting Bitcoin's price. Pal emphasizes that historical trends show Bitcoin's price rising alongside ISM data. If ISM reaches 60 plus, Bitcoin could potentially exceed $300,000 per coin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Is global M2, it kind of consolidates for periods of time. Those periods of time tend to be crypto winter and then crypto spring. As we start transitioning into summer, you get this breakout in M2 and then a retest. We've had the breakout and retest, and what happens is, after that retest, that tends to be phase one correction of the banana zone. We started the banana zone in September, October, November. Then we start correcting. We continue to correct, and then we take off again. That's all to play for. It's very normal. It's playing out like a very typical cycle. The other thing that drives all of this is the business cycle. See, the business cycle is driven by financial conditions, liquidity, all of those things, but this is how businesses do when financial conditions get easier. The ISM survey above 50 shows the economy is starting to grow. Now, economic growth has been strong, but that's been driven by the government sector. But again, Trump and Besant have said they really want the private sector to take over. So what they're telling you is they want the ISM to go up. They want the private sector to start expanding, regular businesses. And regular businesses expanding also drive Bitcoin. So Bitcoin goes up as the ISM goes up. So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. And that will give us the magnitude of the rise in Bitcoin. We don't yet have a full handle on how high the ISM will go this cycle, but if it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher. Now, again, I don't use forecasts because you guys don't deserve them, because you use them against me and say, well, you predicted that. I'm not predicting. What we're trying to do is give you contextualization of how the market can evolve so you can play along from home. Rising ISM will be good for your bags. And rising ISM it may still be choppy because we're still coming through. We need rates to go lower. But as that happens, we will see this pick up. Forward-looking indicators of ISM, like ISM new orders, less inventories, leads by 3 months. It's going up very sharply. Again, expect it to be choppy, but it's telling us ISM should be going up. So that's good for Bitcoin in the future. 3 months' time, Bitcoin should be much higher. Okay, great. It's starting to get this now. The ISM also says, well, when that starts coming above 50, what happens is altcoins tend to outperform. Now, there's all this bullshit online. There's going to be no altcoin season. It's never going to happen. It's only a Bitcoin only season. It's all about the ETFs, blah, 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 blah. Simply, probably not true. Again, we deal in a world of probabilities and no certainties, but probabilistically speaking, as the business cycle accelerates, people go further out the risk curve because they have more money. You're earning more money, your mortgage has gone down, you have higher savings, you can recycle them into assets. It happens at corporate level too, as corporate earnings go up and the overvaluation that people are scared about of the stock market, well, that all becomes noise as well because earnings expand. And then those earnings get recycled into investments and the market goes higher. So altcoins should outperform in the next phase once we get out of this corrective phase. Okay, let's look at these corrective phases. If you guys have got this far and followed me, we've gone through 1, 2, 3, 4, 5, 6, 7 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. Again, you've forgotten about those because you're like, oh my God, it got to 110 and now it's at 80. It's like, it's all fucking noise, kids. Really, honestly. When we go back to 2017, it was more violent because Bitcoin was earlier in its adoption phase and we had 1, 2, 3, 4, 5 30% plus pullbacks, some of them at 40%. So this is more like Solana now, which is more volatile because it's earlier in the cycle. It's more like Ethereum, it's more like others. So this gives you the contextualization of what you're going to have to stomach to make the money. To unfuck your future, you're going to have to learn to deal with volatility. And if you've got any spare income and you can invest, you can buy some of these dips, but be careful later in the cycle. You don't want to overextend when you should be thinking about how do I take money off. But we're far too early for that yet. I talked about we could take lifestyle chips off sometime in the first quarter. Looks like it's pushed out to the second quarter. I'll keep you updated when that happens. But again, I'm very chill about this.
Raoul Pal believes that the digital asset market is in its early stages, with a potential expansion from its current $3 trillion valuation to $100 trillion over time. He envisions a future where financial institutions, corporations, and sovereign entities continue to adopt digital assets, driving exponential growth. As the crypto space matures, he emphasizes the importance of fostering collaboration rather than infighting. The ultimate goal is collective financial empowerment, with individuals reclaiming control over their wealth in a system that prioritizes decentralized ownership.
When you zoom out, Bitcoin is just retesting where it broke out from. That's it, guys. It's hardly a big deal. When we look at the RSI of Bitcoin, it's like the second most oversold it's been in this entire cycle. These are opportunities. When it gets this oversold, yes, it can chop around a bit at those lows, might even make a new low, might chop, rally, new low, which will then diverge on the RSI. But it's telling you 1 month from now, prices will start climbing for sure. They'll be higher than here. And then 2 months, 3 months, 4 months, we should have much higher prices. So once we've got the corrections out of the way, you start to look forward to, okay, now I can get some real price action going again. So that's to come. When we look at Solana, everyone's like, oh my God, Solana, look at the price. It's just gone back into the range. So we had the kind of the meme mania peak. Then we've taken off the memes. Solana got the most oversold it's been, I think, pretty much since the FTX days. It's oversold versus Global M2. It should be fine going forwards. It's a very clean market. There will be plenty of on-chain activity in Solana as we go forwards. It's a broad, deep, rich ecosystem. So nothing to worry about. And I think many of the memes, or a few of the memes, will be Phoenix that rise from the ashes. We will see some great recoveries in some of that stuff too. But remember, that's only for 10% of our portfolio. The risky stuff is 10%. Solana is a core position for most people, and that's a good one. You know, the core positions that I talk about for most people will vary depending on your case. But, I've always used Bitcoin, Solana, Ethereum, and I use Sui as a higher beta bet because I think that's going to do well this cycle. Again, you may choose different names. You may have XRP, you may have something else. That's fine. You do you, I'll do me. Let's just wish each other the best because that's all we want to do. We want everybody to do well out of this. If this is going to go from $3 trillion as a market cap to $100 trillion, we want everybody to make as much money as possible, and we can fuck it to the banking system and everybody else. We deserve this. This is our system. It's made for us, and it's ours to capture. Help each other out is the key thing, and not fight with each other. We're seeing exactly the same in equities, funnily enough. The NASDAQ, we've suddenly gone to this massive bearish sentiment. 80% of all surveys are bears. Those tend to lead to almost V-shaped recoveries. So now, can we have another, one or two sharp sell-offs around these levels? Possibly. But basically, it's telling us everyone's got way too bearish, worrying about global growth. They're not seeing that was something that happened last year, and the forward-looking indicators are doing the opposite. So, your Tesla stock, your Coinbase stock, all of these things that you own, they should be fine going forwards. We've just had a growth scare driven by the dollar and driven by financial conditions. That has passed. The dollar is weakening and rates are coming lower. So when I put my DMARC indicators on top, which are my favored technical analysis indicators, we're at day 6 of a 9 count. So it tells us probably in the next 3 days, this will all be done. Is the low in already? I think it probably is. But could we kind of bounce, have another stab at the low, whatever? Day 9, that would be fine. For the NASDAQ, because it's not open on weekends, it looks like it's kind of Wednesday that it does it. Almost everything has the same set of indicators right now. So it's because it's all driven by the same thing.
Pal draws parallels between the crypto market and equities. He notes that sentiment in the NASDAQ has turned overwhelmingly bearish, a classic indicator of an impending V-shaped recovery. Similar patterns are evident across major stock indices, suggesting that fears about economic growth are overblown. Looking at forward indicators, he remains bullish, highlighting that declining financial conditions, lower rates, weakening dollar, create a favorable environment for both crypto and traditional equities. His technical analysis using DMARC indicators suggests that markets are near a bottom with an expected recovery in the next few days or weeks. Please like and subscribe.